Hi everyone, let's cover my 4-hour time frame and more local bullish and bearish Elliott wave scenarios on Bitcoin. On the 4-hour time frame, these scenarios are shown in a random order, but what is important is the similarity between these 4 scenarios, which I will specifically highlight and show in the probabilities and polylines section at the end of this video. So let's then start with the first scenario here on my chart, which is an unfinished WXY double zigzag structure. So we have an ABC to the downside in wave W. Wave A here is an expanding diagonal. Then we have a flat in X and we look for another move down in Y. Now, flat in X is then 3 wave A, a 3 wave B, 1, 2, 3, 4, 5 is what you're looking for in a wave C. Preferably taking out the high of wave A, that is the most common target for a wave C in a flat structure. And then we want price to move towards the downside. Now, preferably this wave C here also finishes before the vertical line on the chart, which is a fib time taken from the start of wave A to the end of wave B. And then you double click over here, toggle on the 2, which is sitting on the 1st of April, 10 a.m. Central European time. So preferably your wave C is finishing before this red line. And then we want to see a 3-wave zigzag to the downside in a wave Y. So an impulse down labeled as a wave A, 3-wave corrective structure as a B, another impulse down in a wave C. Once that wave C is finished, we then finish wave Y and we look for price to continue its way towards the upside. The second scenario is also an unfinished WXY double zigzag, but this time in wave X we have a running triangle. So this section here is exactly the same, an A, B, C, and W. Then in wave X, running triangle A, wave B. B takes out the origin of A, that's why it's a running triangle. Then we look for a wave C, D, E, and then another zigzag to the downside in Y, after which we look for continuation to the upside. Now, preferably in this scenario, your wave C is not yet finished and you still get another leg towards the upside. The common target for a wave C, a wave D, and also a wave E in a triangle is generally around the 05 to the 786, and most commonly the golden pocket 786 is a nice area as a target for C, D, E. But you can see that even here with this move towards the upside, price did not even touch the 0.5 yet. So it would be nice in this case to still move towards the upside, have an unfinished wave C, and then eventually find resistance. We have a couple of resistances here, which I will show later in the video, and then start wave D towards the downside. Of course, we also have a bullish scenario. The bullish scenario here is a finished WXY double zigzag structure. So now this is a little bit different. So here we then have a wave A, flat in B, and then we have our wave C to the downside. So this is our first ABC zigzag labeled in W. Then we have a WXY sideways corrective structure in our wave X. And then we have a wave A, B triangle, and then wave C to the downside in our wave Y. Now this triangle here, gotta say, triangles are always a mess, right? They're very, very tricky. This move to the downside here can easily be counted as an impulsive structure, not a 3-wave structure. And in a triangle, this move down has to be a 3-wave zigzag family structure. So it is a bit of a tricky structure, but nonetheless, also in this bullish scenario, you would then be looking for price to first move towards the upside, right? An impulse, 1, 2, 3, 4, 5. And most important here is that if you finish an impulse to the upside, this move here has to be a corrective structure to the downside. And that is the biggest difference with the flat scenario, where you also have a 5-wave impulsive structure to the upside labeled C. So that's exactly the same. It's a 5-wave impulse. But here in a bearish scenario, this move down has to be an impulsive structure. You need an impulse, a correction, and an impulse to take out the low. Big difference with the bullish scenario, 1, 2, 3, 4, 5, that's the same, but here you want a corrective structure, either a flat structure, either a zigzag family structure, right? Maybe even a sideways WXY, that's fine. A triangle preferably not, right? We don't want to see a triangle here because a triangle is not allowed in a wave 2, right? So if you get a triangle here, you got to think ABC, but that's stuff for later. So by all means, for the bulls, you need a 5-wave impulse, a 3-wave correction, and only then is it very interesting to look for bigger swings towards the upside. That is when I personally will get interested to look for swings again, right? So it will take some time before I'm interested in looking for such setups, right? I want to see a 5-wave impulse, correction, and then I'd look for a continuation to the upside. Invalidation is taking out the low here at 76.5K. What I do at least want to say as well, because you see it on the chart, so it's important for me to mention it, is this yellow box here. Now, this yellow box is the common target area for a wave Y. It is a trend-based SIP taken from the start to the end of W to the end of X. This is the most common target area for a wave Y, and preferably wave Y finishes between the 0.618 and the 1.618, which this low did. So it's at least a scenario we have to consider. But for the bulls, the probabilities only really significantly increase if you actually get that 5-wave up, corrective structure down. That is the moment where the probabilities really start to switch. And then the most bearish scenario is a 3-wave zigzag structure in a wave 1. So A, B, C, A again expanding diagonal. Then we have our wave 2. Then we look for a wave 3, 4, 5. Preferably here, wave 3 is not yet finished, right? I didn't put wave 3 over here. I could, but I purposefully didn't, just because this move is very short in time compared to wave 1. This low here was made way ahead or way before the 0.382 fib time, taken from the start to the end of 2 to the end, the end of 1 to the end of 2. Basically comparing 1 with 3, and preferably your wave 3 ends after the 0.382 fib time, which this low didn't. So therefore it would be nicer to get a bigger wave 3, right? But by all means, even if I put wave 3 over here, put wave 4 over here, I would still be looking, or we, price, still be looking for another wave 5 to be made and this low to be taken. So in this particular scenario, you need to take out this low one more time. That's basically what you're going to be looking for. The invalidation for this scenario is taking out the high here at 95.1K. Okay, now let's then jump to the lower time frames, eventually check out the news, and then we get to the similarities between all the different scenarios. So yesterday, the probabilities were higher for this structure over here to be corrective, still looking for this high. And the probabilities haven't changed, but I do have some new information to talk about, because if we would be bearish and we look for an impulsive structure to the downside to continue our way to new lows, basically, you need to count from this high an impulsive structure to the downside. So either a 1, 2, 3, 4, 5 impulse, correction, continuation, a multi 1, 2, or a diagonal. Now, if we then look at this structure here from the high, you can see there's a lot of overlap. So an impulse to the downside doesn't work, right? We can't count on nice wave 1, 2, 3, 4, 5, wave 4 and wave 1, not allowed to overlap. There is lots of overlap here. So that doesn't work. So then we have to divert to, hey, can we find a multi 1, 2 here or a diagonal for potentially a bearish scenario continuation to the downside? First off, a multi 1, 2. Lots of stuff on my chart here, but let me explain. So what you're looking at is a wave 1, wave 2, another 1, another 2, and preferably actually another 1, another 2, and you look for continuation to the downside. In a bit more detail, this here has to be some sort of a wave 1. It doesn't really make sense to have this structure labeled as a wave 1, because you can see it looks very 3-wavy, while a wave 1 has to be a 5-wave structure. Arguably somewhere hidden in here, we can somehow label a 1 like a 5-wave structure. So end a wave 1 either here or here, doesn't really matter, but a wave 1. Then we have our wave 2. labeled as a flat A, B, C. So quick move to the upside, A, B, and then a wave C. Did not touch the 886 if you take an 886 from this high to this particular low, but we got very close. And the 886 is a very rare target for a wave 2. Most commonly, your wave 2 retraces to the 0.5 to the 0.786 target area. This wick over here went beyond that 786, almost touching the 886. So it's not too great for the probabilities of a multi-1-2, but at least we didn't hit it. Something else that is notable as well is this 1.618. If this is a flat A, B, C, and this is your wave B, the most common target area for an expanded flat wave B is, let me just put it on the chart here, the 1.236 to the 1.38. And that is the blue area here, the blue fibs. But you can see that we moved beyond the blue fibs over here, beyond the 1.618, and made the low over here. Now the 1.618 is already a very uncommon target for a wave B, and moving far beyond the 1.618 really reduces the probabilities for a flat structure, meaning reducing probabilities, this is a 3-wave flat structure. But for a multi-1-2, we preferably count this as a 3-wave flat because we can't really have a wave 1 over here. Because then we have a 3-wave 1. It doesn't work. And then we have to think about diagonals, but that's the scenario coming up. So that is at least something noteworthy. Then we will label another wave 1. First move down over here, right? 3-wave in 2. And preferably your wave 2 is at this high over here. Reason is that if we want to move this wave 2 to any future price action over here and finish wave 2, for example, at this high, then this wave 2 is over 6 times longer than wave 1. So if you take a fib time from the start to the end of 1, you double click here and you toggle on the 6, then you get this vertical line. Preferably a wave 2 is finishing before the 6, right? It's very uncommon for wave 2s, or very rare for wave 2s to be longer than 6 times wave 1. So therefore, because we are now moving here after a 6 fib time, this wave 2 is preferably already finished, which then would be finished at this particular high, and therefore you would then like to count this as another wave 1, look for another 2, and then a move to the downside. So that then creates 1, 2, 1, 2, 1, 2. If price touches the 886 over here, at 84.3k taken from this high to the low, it will significantly reduce probabilities for this multi-1-2, or at least reduce probabilities even more for the multi-1-2, as an 886 is very rare for a wave 2, and we preferably count this as another 1, get another 2, and then a 3 to the downside. If this 2 touches the 886, reduces the probabilities. Something else that is quite interesting is that this wave 4 almost touched the 618 taken from this high to the low, and the 618 is pretty much an invalidation for a wave 4. It is so incredibly rare. I've never seen it in my life that a wave 4 touches the 618, and Robert Prechter agreed with me when we had a meeting. I actually asked him about it. So yeah, very, very uncommon, but we just missed out on touching the 618. So it's not invalidation, but it got very close. The official invalidation is quite simply taking out the high at 84.7, but touching 84.3 increases the probabilities for the bulls. And then we have the diagonal, the final local bearish structure. So here we then have A, B, and then we have our wave C to the downside, labeled as a wave 1, 3 wave in 2, preferably 3 then finish here. You look for 4 and 5. So you at least look for one more low locally. Right, we still have some untouched support here, by the way, as well. We reverse to the upside just before touching it, 80.3k, 81.1k. These are the levels inside that area for your information. And in this scenario, we once again have this flat here, right? So now we have an A, 5, 3, B, and then 5, C to the downside, where wave B is a flat. And wave B of the flat, meaning this low, moving beyond the 1.618. So it's not too great for the probabilities, right? Nonetheless, that's your wave 1, 2, 3, 4, and then eventually wave 5. The invalidations for a corrective a contracting diagonal are the two red lines here. Now, this red line, the 1-to-1, is a trend-based strip from the start to the end of 2 to the end of wave 3. In a contracting diagonal, your wave 4 has to be smaller in price compared to your wave 2. If you touch 83.9K, then that is not true, and it invalidates this scenario. Alternatively, you can see this diagonal line, and that diagonal line is coming from this channel. You take a channel from the low of wave 1 to the low of 3 to the high of 2. And you can see that the red line pretty much is on top of the upper trend line of this channel. If price moves to the upside and touches the upper trend line of this channel, it also invalidates a contracting diagonal because it's not contracting anymore, right? For a contracting diagonal, your two trend lines have to contract. And the moment you touch the upper trend line here, that is not true anymore. Now, a expanding diagonal is very rare and it's never really preferred unless other scenarios start to fail. So therefore, the moment you touch these red lines here, the probabilities for a diagonal over here in this price action significantly reduce. The reason that I did not include this diagonal here, like a 1, 2, 3, 4, and a 5, is exactly because of that. Because then you have some sort of a diagonal that has to be expanding. I don't even know. I didn't even check this. I put this channel on my chart. I saw this popped above the upper trend line. I didn't even research an expanding diagonal further that ended here. It just doesn't really make much sense, right? So those are important things to at least look for. Now, if we then look at the news, we have some high impact news today, 7 p.m., 7:30 p.m. Central European time. So make sure your trade is safe, right? It can increase the volatility on the chart. And if we then look at the probabilities, and of course the support and resistance areas, which I promised to cover. But let's first check at the probabilities and the polylines. And on a 4-hour time frame, right, these are the polylines of the different scenarios. It's a summary basically of expected price action based on the scenarios covered on a 4-hour time frame. So here on the 4-hour, only if price forms an impulse to the upside and retraces correctively do probabilities move to the bulls, which is the green polyline, right? Up until that moment, your bearish scenarios actually have a higher probability, right? So we can't yet change the narrative, right? So 1, 2, 3, 4, 5 in green, corrective move down, cool, interesting. We look for price to move up, swing longs become very interesting indeed. But you can also see that red, yellow, and blue all lead to another low below this low. So that remains a higher probability unless we get a 5-wave up and a 3-wave corrective move down, which we will cover. What you do see, however, is that in all of the scenarios on a 4-hour time frame, having a move to the upside to at least take out these local highs works. And that is then also what I talk about here in the local section. So the local probabilities, meaning this section over here. Locally, probabilities are higher to see a move up to take the local highs, meaning this double or even a triple top. After that, we have to take it from there. All the 4-hour scenarios can work with another leg towards the upside. The question is, how far does it go? What is the volume? What's the extension, right? What's going to be the move afterwards? Do we get a corrective wave 4 and another 5? Or is it a 3-wave structure and basically we go back down for a triangle, right? So that's just up for debate. We don't yet know. We'll have to wait and see and just observe a move forming. If price locally, right, for a bit more confidence, if price can touch 84.3K, the probabilities for the bulls increase further locally, meaning touch 84.3K, probabilities significantly increase further for price to take out the double top and then for price to hit some of the resistance levels that I'll show in a second. It would be nice, however, and this is just something that I am a big fan of. And if you've been here on the channel for a longer period of time, you know that my boxes, support and resistance areas, tend to be very, very nicely respected. And at the moment, we just missed out on touching that support box down there, which is interesting. So that is why I write over here. It would be nice to see price actually touch support below before any significant moves, and then observe the reaction and look for signs of strength in order to participate, or not if we do not see signs of strength and we just basically dump through support, right? It can happen. That's why we wait for signs of strength. So with regards, so those are the probabilities and the polylines. With regards to support and resistance, this is the closest support, 80.3K, 81.1K. I say the closest support, but actually there's a daily naked point of control in the low of the candles here, 81.250, just above the box. But still, the box, that is a focus area. Above here, we have 88.2, 88.4K, resistance, another one, 92.4, 93.4, and then up here, 95.5, 96.6K. That is everything that I wanted to talk about. I hope that this video was helpful or valuable to you. Please check out the CVD indicator video, the best indicator out there in my opinion, or the Elliott Wave educational playlist to help you understand more about Elliott Waves. Thanks for watching and subscribing, and I hope to see you at the next one. Bye-bye.